2021 was an excellent year for those who invested in large tech stocks. We all know that growth stocks have been among top market performers for many years now. In fact, many reports suggest that the Nasdaq 100 index hasn't had a single down year since the Great Recession back in the year 2008. But with inflation as well as rising interest rates starting to overshadow other concerns, growth investors should be careful in 2022. Keep watching this video if you want to learn about some of the best growth stocks that you should invest in 2022. What's up guys, welcome back to Glory Investing Show. In our today's video, I'm going to tell you about 5 growth stocks I'm planning to invest in. So the first growth stock on our list is Block Incorporated, which was previously known as Square Incorporated. It is an American financial services and digital payments company, which was founded back in 2009. The company's revenue in 2020 was $9.49 billion and its net income was $213.10 million. On December 10th of last year, the company retitled itself Block Incorporated. Here it is important to note that businesses that allowed them to accept credit card payments as well as use tablet computers as payment registers for a point-of-sale system. Block Incorporated also runs a mobile app called Cash App that allows money transfers among users as well as between users and businesses. Currently, the price of Block Incorporated is $161.51 per share, with a 52 weeks range of $157.57 to $289.23. You might also want to note that the PE ratio is 162 and Yahoo Finance's recommendation rating for this stock is 2.2, which means it is a buy. According to a report published by the Motley Fool on December 13, 2021, the fintech pioneer has evolved from its humble beginnings as a financial solutions provider for small businesses into a large organization targeting both businesses and individuals. Along the way, it's become a champion of cryptocurrency, specifically Bitcoin, as a native internet token. Bitcoin trading, which the company counts as revenue, again provided nice padding for total revenue. It passed $1.8 billion or 75% of total Cash App revenue. The same report also states that the company is making significant investments in Bitcoin. In fact, Block Incorporated has invested over $200 million in Bitcoin. A report published by Quartz on December 9, 2021 states, the fintech company Dorsey leads make 3 times Twitter's revenue and has a clear shot at becoming a dominant player in the growing US market for digital payments. The report states that Block Incorporated processed about $112 billion in payments last year, and the company's transaction volume during the first 3 quarters of 2021 was over 40% higher than the same period in 2020. Now, before we go any further, make sure you subscribe to Glory Investing Show and don't forget to hit that bell icon so you never miss any updates. Now, we're talking about a bank holding company that is organized in Delaware and headquartered in Detroit in Michigan. Ally Financial provides financial services such as car finance, online banking through a direct bank, corporate lending, mortgage loans, vehicle insurance, and an electric trading platform to trade financial assets. The company earned a revenue of $6.394 billion in 2019. Currently, it is one of the largest car finance companies in the United States. Moreover, it is also among the largest banks in the US by assets and has around 2 million depositors. On October 21st of last year, the company announced that it has entered into definitive agreement to acquire Fair Square Financial for $750 million in cash. According to a report published by companiesmarketcap.com, the company's current revenue is $8.05 billion. In 2020, the company made a revenue of $6.96 billion, an increase over the years. Currently, the price of Ally Financial Incorporated is $47.61 per share, with a 52 weeks range of $35.30 to $56.61. The market cap of this company is $16.494 billion and its PE ratio is 5.79. It also pays an annual dividend of 2.1% per share. You might also want to note that Yahoo Finance's recommendation rating for this stock is 1.9, which means that is a buy. With that being said, let's talk about the next growth stock on our list. We all know that the metaverse is the next big thing. Well, Facebook even changed its title to Meta. And when Mark Zuckerberg is doing something, you know it's going to be big. If you want to step into the metaverse game, one way is to invest in a company that is working in the metaverse space. Well, Matterport Incorporated is one of those companies. The company provides a platform to capture, store, share, and experience 3D images and movies. It was founded back in the year 2011 and aims to support the customer base that needs an integrated 3D model service to operate their businesses. Well, if you have seen a 3D virtual property tour, you're familiar with Matterport's technology. The biggest reason to invest in Matterport is that it is the first mover in a massive and largely untapped digital reconstruction market. A report published by InvestorPlace on December 7th of this year states, the company claims 5.6 million spaces under management, that is, digitized building scans. It also estimates it has 100 times the amount of spaces on its platform as the entire rest of the market. The company has an incredibly scalable business model. In November of 2021, the company announced its financial results for the third quarter of 2021. During this quarter, the total subscribers increased 116% from the year-ago period. During the same time, the paid subscribers increased 35% to 53,000. And as per reports, the subscription revenue grew 36% to $16 million, and annual recurring revenue grew up to $63 million during the third quarter of 2021. And a report published by Globe Newswire on November 3, 2021 states, total revenue was $27.7 million, up 10% compared to the third quarter of 2020. Right now, the price of MTTR stock is $20.64 per share, with a 52 weeks range of $10.45 to $37.6. And Yahoo Finance's recommendation rating for this stock is 1.8, which means it is a strong buy. VICI Properties is a real estate investment trust that can prove to be an excellent long-term investment opportunity for you. The company owns at least 29 casinos, hotels, racetracks, and 4 golf courses throughout the United States. It generated a revenue of $1.23 billion in 2020, and the net income was $896 million. When the company announced its financial results for the third quarter of 2021, CEO Edward Pitoniak commented, "We have announced over $21 billion of transactions so far in 2021, with our $4 billion acquisition of MGM Growth Properties. Upon closing of these transactions, VICI will own 10 properties on the Las Vegas Strip, the most economically productive street in America." During the third quarter of 2021, the total revenue of the company was $375.7 million, which shows an increase of 10.6% compared to $339.7 million for the quarter ended September 30th, 2020. Currently, the price of VICI stock is $30.11 per share, with a 52 weeks range of $29.86 to $30.36. You might also want to note that the annual dividend rate is 4.78% per share, and Yahoo Finance's recommendation rating for this stock is 1.7, which means it is a strong buy. And lastly, we have Cisco Systems, which is an American multinational tech conglomerate corporation. The company develops, manufactures, and sells networking hardware, software, and telecommunications equipment. It is one of the largest IT companies in the world, with $49.81 billion in revenue earned in 2021. According to a report published by Investors Business Daily on December 28, 2021, Cisco said it expects subscription revenue to account for 50% of total revenue in fiscal 2025, up from 44% in fiscal 2021. Moreover, the company also expects that its total addressable market will reach $400 billion by 2025, up from the current $260 billion. Yahoo Finance's recommendation rating for this stock is 2.4, which means it is a buy, and its current price is $63.37 per share. Well, that's all for today's video, and thanks for watching it. If you liked it, make sure to give it a thumbs up and share it with your friends. Also, don't forget to share your thoughts and valuable feedback with us in the comment section below. And lastly, if you have not already subscribed to Glory Investing Show, subscribe to it and press that bell button so you will be notified each time we upload an interesting video on this channel. And while you're here, click to watch one of these 2 videos that are appearing on your screen. We'll see you there. Take care and stay tuned.